Hello again, everyone. It is 8 o'clock in the morning, Chicago time on Thursday, February the 1st, 2024. I'm John Kosar from Asbury Research, and this is your Daily 5. Let's begin with a brief recap from our previous December 13th Your Daily 5, where we pointed out that the October 22 major uptrend in the S&P 500 was still intact and it was resuming. We said that our Asbury 6 risk management model turned back to positive on November the 2nd. We said that our SEAF model, Sector ETF Asset Flows model, favored technology, XLK, which has outperformed the S&P 500 by 3% since then. And we were also favoring communication services, XLC. That has outperformed the S&P 500 by 6% since then. We'll talk a little bit more about the communication services sector in just a few minutes. We also said that investor sentiment had indicated favorable conditions for a year-end rally in the U.S. stock market. And finally, we said that 10-year yields declined for 5%, which they were testing at the time was a positive sign for equities. Since then, the benchmark S&P 500 has risen by an additional 4% since December 13th. So that takes care of where we've been. Now let's look forward into February via my 5 most important charts, data series, and Asbury Research quantitative models that I believe are the most important to be aware of and potentially the most influential to U.S. stock market direction over the next several weeks to potentially the next several months. Let's follow the money. So number one, the S&P 500, watch underlying support at 48.19 to 47.93. Here's that support, and the January 2022 high at 48.19, which used to be a resistance level, is now underlying support. And right underneath there, we've got 47.93, which is the peak that we made on January the 12th. So you've got this two different support levels that define, in our view, where we're going next. If we break down through 48.19 to 47.93, our next stop is 47.11. That's the 50-day moving average. That's in blue. I'm circling it here. That's the minor trend that went into effect in November, the bullish minor trend, shortly after, really coincident with our shift to back to positive in the Asbury 6. Through 47.11, that trend is no longer valid and it would open the door for a deeper decline. Number 2, market internals. The Asbury 6 turned negative on January the 31st. And here we see the Asbury 6. This is updated every day about 2 hours after the close, and Asbury Research's Research Center. It's the password protected part of the website where subscribers go. And you can see right now through yesterday, 5 of our 6 constituents, which are the rate of change in the S&P 500, relative performance of stocks and high yield bonds, investor asset flows, volatility, trading volume, and market breadth. 5 of those 6 are negative. 4 or more in one direction indicates a directional signal. We also see by looking at the chart underneath, we've getting some kind of down, up, down signals very tight together. So we were negative here on Jan 12, positive back to on January the 19th. We went back to positive, and then we're negative again now. This is called blinking. Blinking occurs when the market is typically at an inflection point, and it often indicates that we're getting ready for a change in direction. If that's the case, the change in direction is going to be down. So we actually see the blinking that's taken place over the last couple of weeks or so as being more evidence that the market is starting to shift from a positive bias to a negative one, making this indicator really important to watch. If you want to find out more about the Asbury 6, by the way, if you go to asburyresearch.com and go to models, you can find all kinds of information there about the A6 and about our other models, just for a little context. Number 3, relative performance. Technology is critical to further market strength. So what we have here is the NDX, the NASDAQ 100. That's the 100 biggest tech stocks, along with the NDX, along with the 200-day moving average, which is a major trend proxy. That's in the upper panel here. Down in the bottom is the important panel for me. That's the relative performance of NDX versus the S&P 500. And what we see is since January the 20th, it's been outperforming on a 63-day basis, a quarterly basis. That is our strategic time frame here at Asbury Research. You can see it was tested multiple times, and we most recently tested that trend on January the 4th. If this trend fails and the NDX starts to underperform the S&P 500, that's going to be a very negative thing to happen to the market. A lot of the strength that we've been seeing, particularly really since the right around January 7th or January 8th, you really started to see exceptional strength coming out of a few of the names that are in this index that have to do with AI. So that's what's been dragging the rest of the market higher, is exceptional strength by tech, particularly these AI names. So if these start to fail and NDX starts to underperform the S&P 500, basically in our view, the S&P 500 really kind of loses the retro rockets that we've been seeing here over the past several weeks. And with sustained negative signal in the Asbury 6, that would be very good evidence to us that we've got some kind of at least a tactical top in place in the S&P 500. Number 4, the SEAF model rainbow charts. Communication services are still attracting assets. Our SEAF model, sector ETF asset flows, is what it stands for. It's an acronym for that. You can find out, again, more about SEAF if you go to asburyresearch.com and go to models. From there, our SEAF model is our asset flow based model that follows the money around the 11 sector spiders, which together are the S&P 500, and we rank every sector once a week in terms of whether it's favored or it's neutral or it's a void. And you can see that the communications sector here, XLC, moved into favored territory according to the SEAF model on December the 5th. Since then, XLC has outperformed the S&P 500 or SPY by 6%. Why? Because asset flows drives performance in these sectors. So as long as XLC stays in favored status, it's going to continue to be favored, and it'll likely keep outperforming the broad market. Number 5, seasonality. Seasonality, February is the second weakest month of the year in the S&P 500 according to data that goes back to 1957, which is when the S&P 500 originated. It turned into the S&P 500 from another index that was called the S&P Composite Index that dates back to the early 1900s. So here's the takeaway. Very strong fourth quarter here. Oct, Nov, and Dece are the 5th, 1st, and 3rd strongest of the entire year based on these data. We have a little bit of a letdown in January, which is the 7th strongest year, and here's February, the 2nd weakest month of the year. And on average, throughout those 60 years, going back to 57, it's been negative for the month. So we don't look at seasonality as a reason to put on a trade. We look at it as maybe a tailwind for an existing trend. So the Asbury 6 turns negative. We lose our leadership from technology. Now we've got seasonality pushing down as well. So this isn't a hard sell signal right now, but I think it's definitely a signal for people that are in the market to start to consider what to do if there's further weakness here and we break that support that I talked about in the S&P 500 in slide number 1. So there it is. These are my 5 most influential market metrics to watch according to Asbury Research's data-driven approach to stock market investing. They collectively suggest that the market is starting to weaken internally. If it persists, especially with seasonal headwinds, as I said, the market will be vulnerable to a potentially sharp downside correction during February. You can get a copy of this PDF from the presentation today by contacting us via the contact tab at asburyresearch.com. If you like my approach to investing, you can get more research and podcasts just like this one by visiting Asbury Research's YouTube channel and subscribing there. You can also request information about Asbury Research's premium services for investors by going to asburyresearch.com and again going to the contact tab and giving us some information so we can follow up with you. Thanks for watching. I'll be back in about a month with another Your Daily 5 by StockCharts.com.